All right, hey, what's up guys? This is Scott here again with my next live trading video. Today is Friday, June 10th, and today, as of this morning, the CPI number for May just came out, and it basically set a new record high in recent times. And so for this video here, we're first going to go over this article, which contains the basic facts as to what's happening with inflation and basically how it's still accelerating, even though the Fed is trying to raise rates to combat inflation. And then after that, we'll hop over to Thinkorswim, and I'll show you guys some technical analysis on the S&Ps and the NASDAQ to show you where I think this market is headed. And spoiler alert, I do think equities are going to be seeing a lot more selling even after today. And also towards the end of the video, I'll show you a new trade I placed this morning in NFLX, as well as a few adjustments I made to a few of my wheel strategy positions to handle this crazy situation. And also, I do want to give a brief channel update here. So next week, I will be on vacation all through next week. So therefore, I may only post 1 or 2 videos. Now, real quick here as well, before we get started, in case any of you guys are interested in getting some free stock or some free money, I've got some very cool opportunities and promotions in the description of this video. So check them out. Right, for example, if you want $200 of free stock from Tastyworks or a bunch of free stocks from Webull, free money from SoFi, etc., then again, check out the links in the description of this video. And secondly here, in case any of you guys are brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you'll also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Alright guys, so now we'll dive in here, and first off, let's take a look at this article briefly, which the headline is obviously pretty straightforward. Stocks are sinking massively after inflation soars by most since 1981. So obviously, if you do the math there, we have not seen inflation this high in 41 years. And so basically, if you scroll down a bit here, as you can see in this paragraph, the Bureau of Labor Statistics released the CPI number this morning, which of course is the main measurement of inflation. And the main surprise was that the index, or the CPI number, increased or accelerated to post an 8.6 annual increase in the month of May. And this is on the heels of an 8.3% rise from April. And like I mentioned at the beginning of this video, this marked the biggest jump since late 1981 and took out the prior 41-year high set in the March CPI number, which was 8.5%. And then for some more added details, you can see this paragraph right here, where basically on a month-over-month basis, CPI also jumped by 1%, which is more than the 0.7% rise that was actually expected month-over-month. And core inflation, which excludes volatile food and energy prices, rose by 6% on an annualized basis after April's 6.2% increase. So core inflation actually cooled off a little bit compared to last month, but of course, because we still do consider food prices and gas prices, then altogether, collectively speaking, inflation has made a newer high in the past 41 years. And so of course, this news is definitely spooking a lot of traders and investors alike. We're seeing interest rates spike this morning, and also equities are plummeting as well. And so now let's come over to Thinkorswim, and we'll first take a look at SPY, which is an ETF that tracks the S&P 500. And we'll go ahead and zoom in a bit here on this chart. And so as I've been talking about in previous live trading videos, for the past 2 weeks, basically, the entire market has been stuck in this very tight consolidation pattern. Right? Basically, the intent here was to try and break above this major resistance point at around $415 per share on SPY. But every single time I tried to break above that point, it failed. And so naturally, of course, if the market quite simply cannot go higher, then at some point, what is it going to do? It has to go lower. Right, obviously the market is not going to be continued to remain stuck in this super tight range indefinitely. At some point, it either has to break above or break down below this range here. And so yesterday in particular, we saw the first sign that the market was going to break down lower. And today now, with the bad news around the CPI number, this just added fuel to the fire. So now all equities across the board are sinking much more today, and specifically for the S&Ps here, or for SPY, the last bastion of hope basically is right around here at $385 per share. Right, this is the main support level, which has held many times in the past and prevented the market from going lower. And so I would say at minimum, probably next week, we are going to retest this level once again. And if that does happen, that's going to be a very pivotal moment for the market. Right, either the market is going to find support here once again and bounce off that point, or, which is my expectation, this support level is finally going to break. Right, obviously with no end in sight around inflation, the issue is clearly getting worse, even though we've seen in the past few months the Fed trying to increase interest rates to combat inflation. I personally don't see any reason why the stock market is going to climb higher anytime soon. So again, keep your eyes on this major line in the sand for SPY at around $385 per share. And then briefly, if we come over to QQQ, which is a NASDAQ ETF, and let's go ahead and zoom in here a little bit. And there you go. As you can see, a very similar story as with the S&Ps. And so for the Qs here, the major line in the sand or the major support level is around $285 per share. So again, watch this level here. And then lastly, let's take a look at IWM, which is an ETF that tracks the Russell 2000 index, which is mostly comprised of small cap companies. And this one here still clearly has a lot more room to run to the downside. Right, currently, IWM is still stuck pretty much right in the middle of this range here. But once again, same thing. The major line in the sand for this ETF is right around $170 per share. Break this point, and we could see the entire market make a huge tumble down lower. And then also one other major index I want to show you guys involving implied volatility. If we go to /VX here, these are the VIX futures contracts, and they show you the implied volatility for the S&P 500, which basically here is a measurement of fear or uncertainty about the future, and more specifically about where option prices are right now. So very often when huge sell-offs occur, you will see a spike in implied volatility across the market, basically a spike in fear amongst investors and traders, which also has the effect of spiking option prices. So naturally, of course, given that in the past 2 days, we've seen some pretty big sell-offs across equities, that's why the VIX here has increased quite a bit. And so the bottom line here is it's moments like this where option sellers like myself look at this as a great option selling opportunity. Right? Because logically speaking, if the prices of options have spiked just in the past 2 days, then if I were to step in and sell those contracts, my profits potentially would be much larger. Right? For example, why sell perhaps a put option when implied volatility is down here, where maybe I could sell that put for $200 compared to today, where perhaps I could sell the exact same put option for $300. And so ultimately, that's why I stepped in this morning and sold a brand new short strangle on Netflix. So briefly, we'll go over to NFLX. And I do apologize for all the stuff that's on my screen here, but essentially, as you can see, Netflix has been stuck in a pretty tight range over the past 2 months or so, right? It's basically been pinned under a price of around $205 per share or so. And then on the downside so far, it has failed to go below about 160. Moreover, if we come down here and take a look at the implied volatility for Netflix in particular here, although this here is not super significant, but we are still seeing a small little spike of the implied volatility for this stock. And again, that's because implied volatility is spiking across the entire market right now. And so ultimately, that's why if we come over to the trade tab now, why I sold a short strangle in the July 8th weekly expiration cycle with 28 days left to go. So we'll unfold that tab here. And real quick, basically the reason why I chose this weekly cycle is because typically for these kinds of trades, I want to be under 30 days until expiration. And unfortunately, the July monthly cycle still has around 35 days left to go. But as you can see here from my short strangle, on the call side, I sold a 215 strike call, which is pretty far above that upper bound of that range here for Netflix at around 205, right? Like I showed you on the chart there. And then on the put side, I sold a 150 strike put option, which also is about $10 away on that support level on the downside there, which again was around 160. And so there you go, a very simple trade there in Netflix. Again, I just wanted to take advantage of that little spike in implied volatility that we've seen across the market today and sell some pretty expensive options. And then lastly in this video, let's come back to the monitor tab and take a look at these other orders I made also in Netflix and Apple this morning as well. And so essentially here I do have 2 wheel strategy positions in Apple and also in Netflix as well. So again, this short strangle order here is totally separate. And where specifically for Netflix, I was short the 195 strike put option in the June monthly expiration cycle, which as of today only has 1 week left to go. And for most of the duration of this trade, Netflix was actually above my put strike, so there was no need to manage this trade in any way. But in the past 2 days, basically, Netflix has dropped by quite a lot. And now it's actually far below my put strike of 195, so that's why I basically rolled out my put option to the July cycle and also changed my strike by a little bit. And the way this works is in this one order here, I bought back to close my existing June put option with a 195 strike. And then at the same time, I sold to open a brand new contract with a 190 strike in the July monthly expiration cycle. And I was able to do so for an additional credit of $240, which is pretty nice. So essentially, by rolling out my contract to the next cycle, I've given myself a full extra month of time to be correct on this trade and for Netflix to hopefully recover. And also, I've reduced my risk on the trade substantially by lowering my strike and collecting more additional credit. And I also did the exact same thing again with my Apple wheel strategy position as well. However, in this case with Apple here, I was short also a June contract with a 150 strike for a put option. However, when I went to roll out this contract to July, I was not able to change my strike at all. And the reason being, if I were to do so, the next strike was basically a 145 strike put option in July. And if I wanted to roll to that strike, I would actually have to pay a very large debit, as opposed to, in this case, still collecting an additional credit. But sometimes that's just the best you can do, and at the very least, I still collected more credit, which I can use to offset any possible losses when I do finally exit this trade, and also I give myself an extra month to be correct on the trade as well. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want some free stock or some free money, then check out the cool opportunities and promotions in the description of this video. And also, if you have an interest in taking some very detailed classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links also in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.